I've been trading the same strategy every day for the last 7 years. It's called the break and retest strategy. It's extremely simple and easy to follow, but after testing thousands of failed setups, I discovered why some retests work and others don't. If I asked you about this break and retest entry here, would you buy or sell the trade? If you said buy, the trade failed, which would have made you lose money. And the reality is 95% of traders that trade the break and retest are missing 3 simple but important rules that keep them losing trades. In this video, I'm going to share the 3 simple rules I added to my retest strategy that help me increase my win rate. And then I'll show real examples using these rules so you can see it work in real time. I tested 1,000 failed retest setups and I learned 3 simple rules that help me avoid complication but also get a more precise entry every single time I enter into my setups. Now, these are the same rules I learned 4 years ago that helped me go from an inconsistent / unprofitable trader to a profitable trader. Now, it's very important to mention this took years of work to achieve. This was not overnight, but the purpose of this video is to explain what I learned in the process of becoming a profitable trader. In this video, I'm going to explain the 3 retest rules you need to learn if you want to master the break and retest setup. And these lessons are the exact same rules I use every day to consistently execute the break and retest strategy. So lesson number 1, we need to understand what the break and retest setup is. First, I'm going to explain exactly what the break and retest setup is. Then I'm going to help you understand why and how it forms so you can enter more profitable trades. So when we're looking at this stock right here, you can see we have a low down here, a high up here, another low, and high again. And from the stock, all you see is the stock hitting the highs and lows consistently. If I was to ask you, what do you think this stock is doing? What do you think the answer would be? The answer is this is range price action. What this means is every time we came into these highs up here, we had resistance holding the stock down. And every time we came down on the stock over here, we had support holding the price to the upside. And therefore the stock kept in this range because sellers try to bring it down while buyers were trying to bring it up. And this is a crucial concept you need to learn if you want to become a profitable break and retest trader. If we have a resistance on the stock where it's hard for it to break above, this means that there is more sellers than buyers there. What this shows me is every single time we came up into this area, sellers were overpowering buyers and therefore their sell orders were so aggressive that we kept going back to the downside. Vice versa, every time we came into these support levels, we know that buyers are going to be more aggressive than sellers, and therefore buyers needed the stock to hold above this support level, and this is why we kept moving to the upside every single time we hit the support, and we kept going to the downside every single time we hit resistance. Now, that was the range or consolidation price action that I just showed you over here. This is what's called fair price control. When we have fair price, we want to observe the markets. We do not want to take a trade, especially as a break and retest trader, but rather we want to observe what price is doing. What we're going to do is mark out the highs and we're going to mark out the lows, but our main objective is to wait for the stock to either break below or above the higher low. We do not want to trade this range or consolidation action as this is the lowest probability for the break and retest setup. Now, on top of this, we know that there's only 3 ways a stock can move. One is the fair price control. The second one is the uptrend. Now, this is the one you most likely know the most. This is when you want to go long or buy the stock. All an uptrend means is when we have a low here, we create a high, the next low has to be higher than the previous low, and we continue this for the upside as well. The next high has to be higher than the previous high, and this continues all the way up. If we see an uptrend, this is where we would want to trade the break and retest for a long position or a buy position. However, the other way is a downtrend. This is called bear's control. This is where we would want to short or sell a position. And this means when we have a high, the next high is lower than the previous high. And when we have a low, the next low is lower than the previous low. Therefore, for this side, we want to identify the lower highs as a retest to the downside. And for the upside, we want to identify the higher lows as a retest to the upside. So when we come back to that previous example with the resistance up here and the support down here, we we know that we do not want to trade in between the range, but rather for a long position or a buy position, we want the stock to break above the resistance, come back and retest for continuation to the upside. And for the downside, we want the stock to break the support level, retest the support level. This is where we would enter in for a move to the downside. Now, just because I say this, what a lot of traders will ask is, why don't we just trade the breakout? On this example, we see that the stock has finally broken above this previous resistance right here, and we see buyers stepping in. So the question that you would get is, why don't you just enter in right as a stock breaks out? Well, when a stock breaks out, it can easily come back and not hold the previous resistance. And this is called fake out liquidity, where buyers spring the stock up. However, there is sellers sitting right up here where they are trying to hold the price down, and they will have big sell orders bringing it all the way back down. This is not something we want to trade. This is a much more low probability trade for a breakout position, and we want to stay away from the breakout because we want high probability trades, but also low risk trades as well. And to get those high probability, low risk trades, what we're looking for is a stock to break out and then retest this previous resistance, because when we break out of resistance, this resistance now turns into support. The reason it turns into support, because first we were holding below 3 times here. However, once we break, we now need to hold the same level for the upside because buyers need to step up here. The reason buyers need to step up is they know if we break below this, we're going to go right back into that range action. However, now we have a very clear uptrend on the stock, and therefore, where would the next higher low that we just talked about be placed? Well, it would be placed right at the support level right here, and therefore this is going to be the lowest risk but highest probability entry. And as we can see here, we broke above, we came back for the retest. You can see strong price action where buyers stepped in. We would enter the trade here, and we can see this one worked extremely well all the way back up into highs. So we were able to avoid not entering on the breakout or having any FOMO because we have a systematic plan of always entering low risk break and retest trades. And this way, instead of a breakout where we have a low risk to reward and we have a low probability trade, this gives us the highest probability along with the highest risk to reward trade. So for lesson 1, I just helped you understand how the break and retest forms and why that is so crucial to understand. And now that we understand how the break and retest forms, let's go over to lesson 2. To start lesson 2, I want to talk about how to get the best entries on the break and retest. And therefore, I'm going to ask you a question before we go through this lesson. In the comments down below, before watching this, I want you to answer, which trade would you rather take? Would you trade option A or would you trade option B? We can see both of these set up as the same break and retest. We broke above the resistance, and now we're coming back for the resistance that turned into support, and this is where buyers need to hold price for a move to the upside. The same thing can be said on option B as well. However, out of option A and option B, which one would you rather take for a move to the upside? To help answer the question, you need to understand how we're going to get the best entries. And to get the best entries, we need to understand price action. Now, to understand price action and to simplify price action, there's only 3 main candles that you need to focus on. The first one will be the bullish candle, the second one will be the fair candle, and the third one will be the bearish candle. Now, let's talk about how these candles form and how we can execute the best entry for the break and retest. When we're looking at a bullish candle, this simply means that we want the stock to go to the upside. For the bullish candles to form, we need to understand what the candle is telling us. When we have a bullish candle, this green shaded area is referred to as the body, and both the line up here and the line down here is referred to as the wicks. Now, for the bullish candle, we open up the stock at the bottom of the body candle right here, and what this wick is telling us is at one point this was actually a down close candle or a red candle. However, buyers brought this stock all the way back up to highs up here. This would be the top of the candle, and then sellers brought it down just a little bit. That's why we we have a wick here, and now we closed it as a strong bullish candle. Now that we understand how the candlestick forms for the bullish candle, we can actually look at what the best bullish candlesticks are to enter into a trade. Now, my favorite candlestick is this one right here. Now, this is called the hammer stick candle, and what this candle shows is the candle opened up right here. Sellers brought it all the way down, so at one point this was a red candle, but buyers brought it all the way back up and closed it at the high, and you can see there's no wick here. And what this candle signifies to me is, let's say there was a break and retest set up right here. Well, sellers tried to bring us back below the support level, but buyers brought it all the way back up, and we held the support level for a move to the upside. And therefore, you can see why this candle shows us that sellers and buyers had a fight, but buyers won, and therefore this would be a high probability entry. The next candle here, this is a fully bullish candle. You can see there is no wicks on this candle. This candle opened at the bottom of the body candle and closed at the top. This one just shows strong buyers stepping up, and of course this is a bullish candle. And the third one is very similar to the hammer stick candle. However, we just have a wick up here, which shows a little bit more weakness than the full hammer stick candle, but this still is a very bullish candle, and we can still enter in off of it for a retest to the upside. Vice versa, for a bearish candle, this is when sellers are in control. For the bearish candle, we have the open at the top of the body candle. You can see this high up here. This means that at one point this was a bullish candle. However, sellers then stepped in and we closed it all the way at the bottom, which is near the lows, and this is why it's a bearish candle. Now, it's the same thing with the bearish candles, however, just flipped. So therefore, my favorite bearish candle is going to be the inverted hammer stick candle right here. This simply shows that we opened up here, buyers brought the stock up, however, sellers brought it all the way down. Therefore, if we were break and retesting, we can see that buyers try to bring the stock up, then sellers stepped in, and this is where we would enter for a move to the downside. Same with number two. We open up the candle here, we close it here, which means sellers were present the whole time. There were no buyers, and of course, this is going to be a bearish candle. And for number three, the only difference is this one has a lower wick compared to the first candle. However, this is still a strong retest to the downside. Now, the next thing we need to understand is the fair price candle. All this means is buyers and sellers think price is neutral. This is much more of a consolidation candle. And here you can see we have a high up here, we have a low, but for the body, you can see we opened and we closed at the exact same level. Therefore, after sellers brought the stock down and buyers brought the stock up, they both believe that price is neutral, and therefore nobody wins. And both parties agree that this stock or price is at a fair cost. Similar to when we were talking about the uptrend, consolidation, and downtrend, this would be that fair price that we were talking about earlier. So now that I explained exactly how price action and candlesticks form, what do we think about option A and option B? If you said option B, you would have won your trade. If you said option A, you would have lost the trade. Why is that? You can see with option A, you have much more upper wicks. Even the green candle had an upper wick, and then we had a move to the downside. You can see the green candle, though a little bit bullish, was still much more of a neutral candle, especially after a lot of down close candles. And you can see the price action here wasn't as strong as option B. In option B, you can see a break above, a retest, and you see no upper wicks on these candles right here. You also see buyers trying to step up above the retest level with the lower wicks, showing that sellers are trying to bring us down, but buyers brought us right back up, and therefore option B won compared to option A. Now, don't worry if you don't understand this concept fully just yet. When we get into the real examples, this will make much more sense the more examples you see. So for lesson 1, I explained how the break and retest forms. For lesson 2, I explained how to get the best entries on the retest. And now for lesson 3, this is going to be the most important part of the video. We're going to look at failed versus winning retests. Now I'm going to show you 3 real trading examples in the real markets, and we'll differentiate what makes a failed retest compared to a winning retest. And therefore, by the end of the video, you'll come to the conclusion on how to find the most high probability retest setups. Okay, so here we are on the first example. Now, for every single one of these examples, all I'm going to do is mark out the first 5 minutes of the New York Open. This means from 9:30 a.m. Eastern to 9:35 a.m. Eastern. This is the only setup that I'm going to be trading in this video, and what I want to show you is exactly why some setups fail compared to why others win. And by the end of the video, you'll have a clear explanation on why some setups fail, and you'll see how I've been been able to implement this in my own trading. Now, what we're going to do on this example is simply mark out the first 5-minute high and the first 5-minute low. And once we have the 5-minute high compared to the 5-minute low, this was very similar to the resistance and support that I was showing you earlier in the video. All we need the stock to do is break above the previous resistance, use it as support for continuation to the upside, or we need the stock to break below the support, come back, use it as resistance, and then continue its move to the downside. That's how the break and retest setup works, and this is what we're going to be looking for. So for the first setup, let's play out the trade and let's see exactly what happens and if we can get a strong break and retest right away. We got the breakout and we got the retest. Now, I want you to notice how we got this. We marked out the first 5-minute high and look at how strong buyers came in from the low. We only had up close candles all the way up, and then we needed a pullback because you have to remember, every stock needs a pullback before the next leg up. Don't be scared of the pullback. This is healthy and you need this for an uptrend. Now, on this pullback, you can see we are retesting the 5-minute high, and look at the price action here. We got a very strong price action candle. We see that buyers stepped up, and this is a very bullish candle that we can look to enter on for continuation to the upside. Here we would enter into a long position. Our stop loss will simply be below the candle we're entering on, and we need at least a 2R multiple. This simply means for every $100 of risk, we need to make $200 of profit. For this example, we can target out the 177 whole psychological number. This gives us a 2.21 risk to reward, meaning for every $100 of risk, we would make $220 of profit. Let's enter into the trade here and let's see exactly what happens. And you can see within 1, 2, 3 candles, we would have already been done the day. And this was $810 by simply understanding how the break and retest setup works and being able to execute high quality break and retest setups. Now, this was the first example. This was a bullish break and retest setup, and this was a winning setup as well. In this video, I'm going to show you both the winning and failed setups, so you'll be able to understand the difference between both and see what truly makes a winning strategy with the break and retest. This was the first setup. Let's go over to the second setup. Okay, here we are on the second example. On this example, we're on QQQ, and we're going to do the same thing. We're going to first play out the first 5 minutes of the day, and now all we're going to do is mark out the high and the low of the first 5 minutes. Now, from here, we know that we need to break above, retest, continuation to the upside, or break below, retest, and continuation to the downside. Exactly how I explained before and how we saw in the previous example. So let's play out this trade and see exactly what happens with the break and retest. Here we can see we broke below the 5-minute low, so this support broke below and we were waiting for the retest. However, there was no retest. We just got buyers stepping up and now we're right back into that range action. So this already shows us that this is going to be a low probability day as the first retest did fail. However, we'll see if we can get a break and retest setup to form on this specific day. Here we can see we moved all the way up. We came for a brand new high. We did not close above this level and therefore we rejected. We're now coming back down for the downside retest. You can see all we're doing is ranging in this price action. So in this price action, we don't want to take anything. However, now we are breaking below and we would be looking for retest after breaking out of this range price action. And right here, we can see we broke below. We're coming back for the retest. And here we're finally getting weaker price action. Now, on a day like this, where we know we had choppy price action previously, we broke below, no retest, we broke below, no retest again. This is technically the third time we're coming for that retest. We're going to enter into the trade here for a short position with our stop loss simply at a break above the candle. This gives us a 2.18 risk to reward trade. Let's see exactly how this trade plays out. And unfortunately on this trade, this was a failed retest. We ended up losing $575. In this one, early on in the day, we already identified that it was going to be a low probability day. We had a high and a low of the first 5 minutes. We broke below, showing that sellers were present, but then buyers brought it right back up, showing that buyers are still present at this support level and don't want it to break. We then brought it all the way back up to resistance where sellers were present. And from there, we brought it all the way back down to the support where we broke below. And then when we came back for the retest, this retest came in with very choppy price action on top of a choppier day already, and therefore due to these choppy markets, along with the stock being at a fair price, this made it for a low probability setup, and this is why it failed. So far we looked at a bullish break and retest, we looked at a failed break and retest, but to really solidify the break and retest setup, now let's go look at the final example, which is a bearish break and retest entry. Here we are on the final setup. We're on Tesla here, and you can see we currently just put in the first 5-minute high and we put in the 5-minute low. Now on this day, you can see we came in strong. However, sellers are now being a little bit more present. However, we're still in the 5-minute range, and therefore anything in between this doesn't really affect us too much. We want the stock to break to either side before really looking for an entry. Let's see if this stock can break either above or below, and then based off of that, we can look for an entry. So far, this stock did break below, and now you can see the retest with weak price action. Now let's zoom in on this retest and see if this is a setup that we can take. We had weak price action, we had the 5-minute low, sellers stepped in, now buyers are stepping in, but you can see as the buyers step in, what is this candle? This is the inverted hammer stick candle that I talked about earlier. Buyers tried to bring the stock up, however, sellers came right back and they closed the candle below the 5-minute low. So this is a bearish trade that we can look to enter right here. Our stop loss would simply be a break above the 5-minute low, and our profit target needs to be at least a 2R multiple. In this example, we can target out 301.50s. This gives us a 2.89 risk to reward, meaning for every $100 of risk, we would be making $289 of profit. So our stop loss goes up here and our profit target goes down here. Let's see exactly how this trade plays out. And just like that, within 7 minutes of entering this trade, we were able to capture a $1,500 move by understanding the break and retest and how to execute it. Now, this Tesla trade is the exact trade that I took live in the accelerator, where I live trade every single day in front of hundreds of students to help you see and implement the break and retest in real time when the markets are really moving. With this being said, if you want more information on the break and retest and how to start your trading journey from absolutely scratch, make sure to click the video on screen now. It's a full 10-hour playlist going over everything you need to know about trading. If this video helped you, make sure to leave it a like. If you have any questions, put them in the comments down below. Make sure to subscribe to the channel. Follow me on Instagram and Twitter for more education, and I will catch you next week with a brand new video.